What's up, folks? How's it going? It's Erica here. Nice to see you again on my YouTube channel. This time we're going to talk about the situation that every trader faces, and that is the loss of money. What leads to this and how to eliminate their consequences. I'll be multitasking and overclocking my deposit. We will start trading from $50. Watch this video up to the end and you will find out loads of interesting stuff. In the description below this video, you will find a link to my Telegram channel where you can ask me any questions. There is also a link to my Telegram channel there where I share my daily trading signals. And there's more to that. If you text me on Telegram, you will get a link to the PocketOption registration, which will give you a 50% bonus to your deposit. And that's for free. And now, we're switching to PocketOption and let's go trading. The British pound Australian dollar currency pair is already on the trading price chart. The time frame is M1, which means that each candle on the chart shows the price change in 1 minute. And I opened the first trade for 1 minute with $50 in. Everything is simple here. The price is going up and the line of the Williams percent range indicator is also growing, thereby giving a signal about the possible continuation of the price growth. While the trade's in progress, I will start our conversation. Why do traders lose their money? Let's try to figure out the most common reasons leading to losses in trading. All beginners lose their money, and that's a fact. So, a beginner starts trading an asset, but he's not interested in the market, he doesn't want to follow the news at all, as well as delve into the specifics of the price movement of the asset. Even if a couple of traders using a signal or recommendation turns out to be profitable, they may still end up losing their money. Therefore, try to trade only the assets that you're really interested in, and you should monitor their movement. The trade's coming to an end, and it brought us the first profit, $43.5. Moving on, I think you will agree that trading is not a lottery, not a casino, and not even sports betting. Everything here is subject to the laws of the market, and the price of an asset moves in a certain direction for specific reasons, and it is important for a trader to find patterns between these movements and the factors that determine them. According to that, the reason for the loss of money may be lack of trading experience. Therefore, in order to avoid losses, learn the basics of technical and fundamental analysis, understand market instruments, and then practice on a demo account. Identifying possible reasons, do not forget about trading, but first we will change the trading amount and raise it to $93.5. Unfortunately, our pair's payout is only 87%, so we will try to find another one. Operating the list of assets, we see that amount of exchange currency pairs, the highest profit is 89% for the Euro-US dollar currency pair, so we will choose it for further trading. Studying the price chart, I will continue our conversation. Many traders come to the market with the expectation of millions of profits. They do not really evaluate the market, but just want to get rich. As a result, their path ends with the draining of the deposit on the face of incorrect expectations of profitability. Professionals, on the contrary, study risk management strategies in depth, allocating a certain percentage of the bank for each transaction. Therefore, it is extremely important to understand your goals correctly. After all, the desire to increase your capital 100 times in 2 days without having the right preparation and understanding of the market is the right way to drain the deposit. Here, the way out is simple. In order not to be deceived by your expectations, do not set excessively high goals for profitability from trading. Now I'm ready, so I open a new down trade for 1 minute with $93.5. This time the price was declining and the Williams line was also moving down. And as you understand, this was a signal for me about a possible price decline. In addition, the red line of the Arun indicator responsible for the downward movement of the price was at the level of 100, but the blue line was only about 0. This combination also indicates a possible decline in price. Let's check it out, but for now we'll continue. Imagine that you come to work and have no idea where to start your day, how to distribute your capital and conduct accurate money management, and in general, what tasks need to be done. It's unlikely that such a day will be successful. The situation is the same with trading. Professionals always have a clear goal and a clear trading plan for themselves. They know what assets they're going to trade and on what time frames. Speaking of time, the trade was completed successfully and brought us $83 of profit. So, professionals understand their earning goals and trading strategy. In other words, the rules by which they open trades. So, another reason that leads to lots of money by beginners is lack of trading strategy. But the strategy is the constitution for the trader. They strictly follow it and study its effectiveness. Moving on. The trader has found a good and effective strategy, set clear goals, gained enough experience, but does not know how to cope with emotions. In this case, all efforts will again be in vain, because in this case, the lack of self-discipline will lead to defeats. Let's go back to trading. The situation on the chart does not change, and I open another down trade for 1 minute with $93.5 in. At the moment, there is an active downtrend, and I do not see any signals for its change yet. The trade is on, and we will continue to analyze the possible reasons for unsuccessful trading. So, the trader's lack of self-discipline. Emotions lead to the fact that the trader violates his strategy. He begins to make trades omitting the previously defined rules. As a result, small losses lead to much larger losses. In this case, my recommendation is the following. Study books on self-discipline, develop willpower, and under no circumstances violate this strategy. Because trading should be treated as a job. You don't want to be fined at work, do you? I see another trade completed and another $83 of profit. Now, our balance is already $259. It turns out that it has already grown 5 times. Great. Let's continue the conversation and try to answer the question: how not to lose motivation after a failed trade. Everyone faces unsuccessful trades. They are especially painful for a beginner. The most common scenario for a novice trader looks like this. A beginner dreams of millions of earnings, comes to the market, makes a lot of mistakes, loses their money, and then gets disappointed in this field and leaves trading in financial assets forever. Therefore, when you face losses, remember the following argument. Losses are an integral part of a trader's work. Once again, trading is a job. So successful traders always alternate with failed ones. Even top traders have unprofitable trades. There is no getting away from this. Before continuing trading, I will change the trading amount again and increase it to $259.94. Do not be afraid of unsuccessful trades. The main thing is that the profitability should be positive over the long run. I want you to know that a trader is considered successful and makes profits if he has 60 to 70% of trades closed with profits. And at the same time, do not forget about the profit of successful trades, because it is not in the lost trade when trading over a long period of time. Meanwhile, I'm opening another $259 down trade for 1 minute. On the one hand, the price bounced off the lower limit of the downtrend channel indicator and began to grow. In this case, it is obvious to expect continued growth of price. But the signal from the arrow indicator has not changed yet, and although its blue line is responsible for the upward movement has started to grow, it is below the level of 50. But the red line continues to be at the level of 100. And this is still the same signal about a possible price decline. While the trade's on, we will continue and consider the following argument that helps to overcome losses. The market is always an opportunity. Financial markets are unlimited opportunities for traders. Even if you have drained your deposits several times before, Asset trading still keeps your chance of earning a lot of capital. And the trade is completed and brings us a $231 profit. Great. Moving on, a gradual increase in profitability is a sign of professionalism. We have opened 10 trades and 9 of them were failed. Beginners are usually disappointed in everything, but quit trading or try to recover immediately. The correct approach is to draw conclusions and then open the next 10 trades. When, instead of 9 failed trades, 8 are lost, you are on the right track. Experts say that failure and success go hand in hand. So mentally you understand that failures in trading are a temporary phenomenon, but emotions draw out the voice of reason. It's a common situation. Let's take a short pause for another change in the amount of the trade and raise it to $491.29. And now, let's try to figure out how to cope with losses on a psychological level. And good news concerning you directly raises your mood, increases motivation. Negative news acts in the opposite way. Now let's stop trading. I see changes in price and open an up trade for 1 minute with $491 in. I think that a correction is planned in the downtrend, since a long shadow of the increase of the strengthening of buy side, and if so, it is possible that the price will go up. However, the Williams line is also trying to grow, which with such a strong downtrend is just a signal of a possible increase in price. Now let's get back to the conversation. Unsuccessful trades ruin your mood and reset your motivation. That is why losing money in trading often leads to a desire to quit this activity altogether and switch to something else. At the mental level, the trader understands the losses are normal, nothing terrible has happened, but the emotional level says the opposite. With us, trading makes a profit and the completion of the trade increases the balance to $928. Do you remember that today we started trading with only $50? Our trading's going great and motivates me harder to continue. But if a trader fails, then the motivation is zero. At these moments, it is psychologically very difficult to continue trading because you do not want to experience these feelings again and try to drive away thoughts of new attempts. Coping with a bad trade on a psychological level is the most important thing. Experts identify several steps for this. Step 1. Reduce losses. Do not try to get rid of losses at all. This is impossible in trading. But it is possible to reduce their number, size and impact on the trading activities. Make up a strategy you want to trade on and stick to it when opening trades. If you see that you are opening trades outside the trading strategy, try not to open them again. And now I suggest we increase the trading amount once again and set it to $928.54. We will observe the change in price and at the same time we will continue the conversation. So, you have excluded trades not following your trading strategy. Next, work on reducing the amount of losses, and here the right risk management will help you. And finally, try to think less about losses and perceive them as part of the work. Now I will open another up trade for 1 minute with $928 in and continue the conversation. Next step, step 2. Adjust your reaction to losses. A successful trader is not the one who constantly wins, but the one who knows how to react correctly to defeats. We have already learned how to reduce the number and magnitude of losses. We trade strictly according to the chosen strategy, but it is still hard for us to accept the fact of losses. There are several ways to accept such failures. First of all, it is control of your breathing. It changes under stress, but deep and prolonged breaths and exhalations will help you regain emotional balance. It is also useful to create affirmations, code phrases that you will say to yourself when making unprofitable trades. They will help you to switch from a negative background to a positive one. And everything is positive for us. And the trade brought us a $826 profit. Moving on, step 3. Recover from losses. Losses have been reduced, thinking has been corrected, and now we're moving on to restoring our condition in order to switch to the next trade. First, we evaluate our condition. Next, we analyze the reason for these losses. As a result, it is important to learn how to control your reaction. Rushing to open a new trade to recover your losses is a bad decision. Keep working on your strategy. If you can do something to reduce losses in the future, do it. If not, just trade on. Now, I suggest we think about what lessons should be learned from a failed trade. First of all, that you need to study constantly. A professional trader will never say that he has enough knowledge and there is nothing more to learn. As for our trade, I'm thinking of opening another trade, but before that, I will increase the amount to $1,000. As you can see, the upward correction I expected did not occur. The price decline continues, so I will open a down trade for 1 minute with $1,000 in. We follow the trend and continue the conversation. The next lesson from unsuccessful trades, that is, emotionality, is the main enemy of the trader. Do not try to cope with emotions on your own, relying only on your own willpower. Read psychological books, consult with psychologists. This will definitely help. Avoid introspection. Treat failures philosophically. Your failures should have happened. If the conclusions are drawn correctly, then it is useful. And if you become engaged in self-flagellation, then it is really a failure. In general, it is very useful to seek help and communicate with other representatives of the trading community. Enjoy discussions, you can find a suitable strategy, find mistakes in trading and work them out. Another trade is completed and brings us a $910 profit. Great! This is the end of the overclocking, and let's have a look at the results. Though the results are crystal clear to see, let me tell you, I overclocked the deposit and turned $50 into $2,664. That's a great result, and that said, we shouldn't forget the extremely high risks involved. We could have lost all of our money at any moment, and you can overclock the deposit only if you're dead sure of your strategy. And turning back to our topic, I'm sure, and many share my view, that it is possible to survive the loss of money. A beginner is scared of the very possibility of losing money. Making trades in any financial market is always risky though. You can either increase your capital or lose your money. You've got to be prepared for such risks right away. Otherwise, there's no sense in even starting trading. Deposit the amount you can lose without any harm to your overall budget. For someone, this sum is $1,000, and for the other one, it is $10. Every trader loses money on trades now and then, but only the successful ones have a healthy relationship with it and respond in a proper way. I hope this information will help you make money on binary options. After all, it's only practice that can teach you to understand the market. Yeah, let me remind you that it is essential that you carefully assess the current market situation before entering a trade. By and large, I recommend you to use the indicators whose signals you can read, for this helps reduce the risk and make profit in the long term. I would like to encourage you to keep trading binary options, because as we can see, the analysis techniques are super simple here. And before we say goodbye, in the description below this video you will find a link to my Telegram channel. If you have any feedback, why not send me a message there? I read through every single comment I receive. You will also find a link to my private Telegram channel there, where I share my daily trading signals. And it gets better. If you direct message me on my private Telegram channel, you will receive a personal link to the PocketOption registration, which will give you a whopping 50% bonus to your deposit for free. Now, dear friends, this is a pretty nice offer. Thank you for being with me all this time. And if you found this video helpful at any point, please give it a thumbs up or even a share. Subscribe to my channel and click the notification button so you can find out about any future videos coming this way. Well, that's about all for today. Good luck in the market. Take care, folks, and see you soon in the next video.